Hello, I'm Lieutenant Colonel Tony Bancroft, former F-18 fighter pilot and portfolio manager of the Gabelli Commercial Aerospace and Defense ETF, ticker GCAD. When we talk about aerospace and defense, we're referring to companies that design and build the aircraft, satellites, weapon systems, and advanced technologies used in both military operations and commercial aviation. It's a critical part of the economy, and it's one that's seeing a renewal in investment. The A&D sector is at a pivotal inflection point, with NATO recently increasing defense spending targets to 5% at the June 5, 2025 meeting. Governments worldwide are expected to allocate substantial resources toward infrastructure and national security in both the near and long term. Further, growing technological innovation continues to create opportunities in the industry. The defense sector is witnessing rapid innovation, particularly in areas like artificial intelligence, cybersecurity, and autonomous systems. Global commercial air travel demand is returning to pre-pandemic levels, driven by the growing middle class in emerging markets and evolving airline business models focusing on low-cost carriers using single-type, single-aisle fleets. From my time as a former F-18 fighter pilot to my perspective today, managing investments in this critical sector, this webinar will cover why now is the time to invest in aerospace and defense, highlighting tailwinds from global security dynamics and commercial aviation recovery, my investment process, recent market moves, and case studies from current holdings in GCAD, including the business models, secular growth stories, and defense contracts underpinning the fund. Thank you for tuning in, and I look forward to our live discussion.
Thank you, everybody, for joining us here today. I'm going to introduce our special guest of the day, Tony Bancroft.
Yep.
But first, just want to give a brief background on Gabelli as a firm for those who are not, as familiar. We were founded in 1977 by our chairman, CEO Mario Gabelli, and now we manage over 30 billion in assets across a variety of different vehicles, such as our separate accounts, our mutual funds, and our ETFs, which we will discuss today, throughout some of our value and growth equities, and along with our alternatives business. So a lot to talk about here today, Tony. Some of this is a second language to me, so I'm going to kind of read off my notes as I read your background. Tony was a United States Marine Corps Reserve, joined the firm in 2009 as an associate on the alternative investments division, and is currently covering the aerospace and defense sectors along with the environmental services space. So he previously served in the United States Marine Corps as an F-18 Hornet fighter pilot, and Tony graduated with the distinction from the United States Naval Academy, and then going on to the Columbia Business School, and now with Gabelli, of course. So Tony, I probably did an average job giving you a background there. So why don't you kind of elaborate that and tell us a little more?
Yeah, no, thanks, Miles. I served in the Marine Corps for about 12 years of active duty, still in the reserves. But after I graduated from the Naval Academy, I went down to flight school and learned to fly the F-18. I did 3 deployments, one on an aircraft carrier, the USS Carl Vinson, in 2003 for support of Operation Enduring Freedom, and then went to Iraq in 2005 in support of Operation Iraqi Freedom, and then again to the Western Pacific and did a unit deployment there to Japan, Korea, and all over the Western Pacific. So I came back from that and was an instructor at the flight school for the F-18 out in Miramar, California, and realized that it was sort of my time to get out, and was fortunate enough to get the opportunity to work for Gabelli Funds. I've been covering aerospace and defense and environmental services for the last 16 years, and we've had a pretty good run in aerospace and defense, and I think my background has helped with that. Actually, I've actually gone to factories at the companies we cover and seen parts that we actually used on my plane, which I think sort of help sort of my thinking and where it's maybe where the puck is going in this industry.
Fantastic. So from throughout Asia now to Ryan, New York, you're
Right.
managing GCAD.
Yeah.
Tell us a little more about, how that came about and kind of what that structure looks like.
Right. So, after COVID, obviously, air travel started increasing rapidly. Uh, the supply chain was still constricted, and you got this huge backlog in aircraft orders. On top of that, in February of 2022, as we all know, the Ukraine war, Russia invaded Ukraine, and we started to see a huge amount of demand for defense spending. In that time alone, that first year, Ukraine went through 1 year of Stinger and Javelin weapon systems, essentially missiles, guided missiles. In 1 year, they went through 7 years of U.S. production of those weapon systems. So you're seeing a huge amount of demand. And on top of that, companies like Boeing, who is one of the two OEMs for commercial travel, they've got a $500 billion backlog in planes. Essentially a decade at a run rate of commercial plane production. So we sort of saw those two secular tailwinds and decided, now would be the time to start thinking about doing GCAD, Gabelli Commercial Aerospace and Defense, ETF. And on top of that, obviously leveraging my background following the industry and just my background operationally, just understanding the actual aircraft, flying the aircraft, using the weapon systems that we invest in.
Tony, you said it best. Aerospace and defense is extremely relevant. It's extremely timely. It's part of the reason we're here today.
Yeah.
Maybe dig a little deeper into some of those macro factors that you've seen and kind of what you expect going forward.
Sure. The commercial aerospace industry is driven by multiple things, but the largest driver by far is the emerging economy middle class. So China and India, you have a population of about 1.5 billion, and India is going to be growing rapidly. I know that China has long-term demographic issues, but they're becoming wealthier. Their middle class is becoming wealthier. So you're getting 300 million people moving up into the middle class over the next 20 years, and those people want to fly. And we've talked about this in other seminars at Gabelli about the experiential generation. People want to travel, see the world, and the only effective way to do it is via air travel. So you're seeing that dynamic pushing along with the democratization of air travel. Historically, when I was growing up, obviously during the Cold War, there were very limited places you could actually travel to if you were flying out of the United States or vice versa. So obviously that has changed, and the world has a lot more airports, and there's a lot more places to see. And on top of that, you've got the economic model that's changed as well with a low-cost carrier. So you can essentially fly at relatively low fares and high volume. What that drives is more aircraft. So we're seeing essentially this huge backlog building of planes that need to be built, and both on the narrow body and the wide body space. And travel is just last month, IATA, which is the international trade association for commercial air travel, just put out that their travel is up almost 2.5% this year, and global travels, international travel is up over almost 3.5%. So travel is still very strong, and that's driving commercial plane production. And then on the defense side, again, when I was a kid, the Cold War was going on. The Cold War came to an end with the fall of the wall, and there was essentially a peace dividend that occurred. And countries in NATO decided to focus on other areas versus defense spending. And essentially, the U.S. took over the majority of the defense spending in defense procurement. So roll up until 2022, Ukraine gets invaded, and NATO countries that had been underspending were essentially 1.5%, 1.7% of GDP, well below the 2% target. So now we're seeing European countries and the U.S. by that matter. The U.S. just had a $1 trillion first defense budget request, and European countries looking to spend at least at 2%, which they've gotten to that target, and now actually increasing at 3.5% in procurement of weapon systems. So you're seeing a lot of defense spending going on. So those two dynamics together have really driven this industry over the last few years, and are likely can continue going forward.
Great. And Tony, now let's talk a little bit bottoms up here, something we do quite often here at Gabelli. Tony's one of our 35 research analysts who's charged with the assignment of GAPIC to gather, array, project, interpret, and ultimately communicate your ideas. Moving over to GCAD, what are some of the ideas in the portfolio, and how do they kind of relate to our, trademarked private market value with the catalyst?
Yeah, so we have this a small company. It's about a $5 billion company called Hexcel, and they're headquartered right up here in Stamford, Connecticut, and they make carbon fiber for the aerospace and defense industry, as well as other industries, automotive, sports, and other marine, other technologies. But their main focus is aerospace and defense, and there's a couple things that are driving that. The biggest one is the future of aircraft. Historically, the 737 MAX, the A320neo, those planes have about 15 to 20% of the structure of that airframe being carbon fiber. Going forward to the next generation aircraft, the wide body aircraft that are flying today, the A350 and the 787, that's increased to 50%, and those are going to be on long production rates, as well as the 737 MAX. But the next generation is going to be likely above 60% and probably quite a bit higher over the long term. And it's just a classic story of stronger, lighter, more capability, a lot of benefits of using carbon fiber over aluminum, which has been the historic way to fly for aircraft to be manufactured. So you have this long-term tailwind of growth, and on top of that, you have a huge backlog in those aircraft that use carbon fiber. So we're still at very depressed production rates for commercial planes, and as that improves over the years, a company like Hexcel, which has large barriers to entry, there's only a few people that have this kind of technology. They're sole sourced on most of the programs, and can build this stuff, and they're going to benefit from the growth, that growth in carbon fiber, is essentially being a bigger piece of the pie, and then just a bigger pie with more production as we go forward over the next 20 years.
I know we can talk stocks all day here at Gabelli. Across the board, how do you think about valuations, just given the run up and kind of what you see going forward?
Valuations naturally have run up. The industry has done extremely well, but there's still some wonderful gems inside of the aerospace and defense industry. Hexcel being one of them, and there's many other small caps out there that are essentially subscale companies that probably haven't had the focus as maybe the large primes have, and we still see some good valuations in there, which in our GCAD portfolio.
Great. Now let's move over to some of the questions that people submitted. The first being about M&A. Obviously, we've seen a ton, backward-looking M&A in the space, whether it be private equity or companies looking to vertically integrate. How do you look at that, and how do you see things going forward?
We've had a good run. I mean, one of the early ones I remember at a aerospace and defense conference, we had a company called LtCol that was about to come. The next week after the acquisition was acquired by Northrop Grumman back in 2017, and since then there have been a pretty steady string of aerospace and defense acquisitions. Aerojet Rocketdyne being a large position for Gabelli funds, and that was acquired by L3Harris. And then you've seen a slew of others in recent, essentially in the recent past year and a half. And I think there's going to be more to come. We've seen some financial engineering out of companies like Honeywell. They're spinning off their aerospace business, and we saw obviously GE was a huge success, a big some, again, financial engineering spinoffs. And there's a lot more, again, these subscale companies like a Hexcel or a Ducommun or an Astronics that have these great positions on long-term growing contracts in the Department of Defense or in commercial plane production. And essentially, you have to use that part in order to have that plane built as per FAA regulations. So they're gonna benefit from acquiring these. It's just easier, it's more cost effective to acquire these companies than try to compete and supplant them in a plane's production.
Great. Now let's move back over to Europe a little bit. Obviously,
Right.
been in the center of attention, particularly over the last month or so. How do you think about Europe and investing in that region?
Yeah, as obviously Europe has run up immensely over the last, again, since February of 2022 with the invasion of Ukraine. Obviously those multiples are elevated, and I think they're gonna, again, over the long term, gonna do very well. I'd say though, in the near term, there's still a lot of production capacity constraints in Europe, and you're going to see a lot of capex and a lot of build outs. You've heard anecdotally, you've heard a lot of aerospace and defense companies in Europe have been taking over automobile plants and essentially converting that plant to a weapons factory or a howitzer shell factory, and that's going to definitely continue. But I think in the long term, I think the United States is really the crown jewel of aerospace and defense technology. So I think companies are going to continue to come to the United States, partner with, and I think European countries, like they historically have, countries like France and Germany have historically, been 70 to 90% of their defense spending has been to U.S. companies, just because of our technological advantage and just the compounded knowledge we have in the industry.
Thanks, Tony. And kind of another question that's on that came from the audience, just staying abroad. How will various next generation fighter programs in Europe, Turkey, and Asia affect the prospects of U.S. firms? I know you touched on that a little
Sure.
bit.
Yeah. So there's a lot of next generation aircraft out there, and just like the viewer commented on with Turkey, Europe has the FCAS program. Obviously, China has a couple next generation technologies, and they just showed one yesterday, one of their sort of Delta Wing drones that we've been following. So there's a lot out there. I'd say though, it's one thing to start these programs and build them. It's another thing to actually get the supply chains, the logistics capability that and essentially is a technological prowess that the U.S. has. The U.S. has produced at rate a fifth generation fighter, the F-35, and we saw what Israel, what happened with Israel and Iran with the essentially taking out Iran's. Iran's one of the largest largest militaries in the world, and has one of the most robust aerospace defense surface air defense systems. And in one night, Israel took out their entire surface air defense system with the F-35. And there's probably no other aircraft, at least that I know of, particularly my aircraft, which was a fourth generation aircraft, would have gone into that environment, but the F-35 did. So I think these international programs, I think, will probably do a lot of partnering with technology. But I think in the end, it's going to be just because of supply chain, logistics, technical know-how. The U.S. is probably going to still be the leader in sort of next generation fighter platforms or weapon systems.
Now let's stay on drones. Kind of your thoughts on the drone procurement and how that kind of might impact what you have going on.
Yeah, drones are, there's no question. Again, how I look at sort of current system weapons and next generation like drones and autonomy, it's sort of like right now we're doing transition fuels of natural gas and then eventually transitioning to some more renewable, eco-friendly. I think in the long term, there'll be that will be happening. And I think the same applies here. Drones and autonomy will no question be in the long-term future. And I think US and European aerospace and defense firms will benefit from those. I think the reality is that the capability that's needed right now, drones are very good for very specific missions, like they call it ISR, intel, surveillance, reconnaissance. Certain strike packages that are relatively not as complex as what you saw happen with maybe the B-2 strike on Iran's nuclear facilities, or Israel for that matter, their facility, Iran's surface air defense. But I think over the long term, you'll start seeing drones take over those roles as autonomy and AI come into play. And companies like, the companies that we own are going to be all, the US is the largest drone manufacturer, defense drone, on an absolute basis, drone manufacturer in the world. And on a defense side, by and large, the largest. So, you'll see companies like AeroVironment, Northrop Grumman, you name it, they are going to be benefiting from drone technology.
How do you think about this, non-US exposure within GCAD? And
yeah, I think so. GCAD is our mission statement. Our mission statement is we can only own U.S. listed companies, and the reality is of the almost $2.5 trillion global defense spending market, 1.5 trillion is NATO, and of that, the U.S. is $1 trillion. So the U.S. is a large component of defense spending. We definitely own companies that partner with allied countries. We do own non-U.S. companies that are listed on the U.S. So they're definitely a component of it, but the U.S. is by far the lion's share.
Got it. And what's your thoughts on the, that budget and, how it kind of gets spread, maybe help the viewers understand,
Sure,
if they're not familiar?
Sure, that $1 trillion budget, about 20 to 25% can be procurement. That's essentially where we operate in, as the companies that support the aerospace and defense industry. Another 15 to 20% is R&D, is research and development, and again, that's where we participate. If you go forward, how the Department of Defense projects out what their budget is going to be, and they usually project it at about plus GDP plus or minus. But if you actually look back on what we've spent, that number has been about a 5% CAGR over the last 5 to 10 years. And there's a lot of factors there. We've had these budget cuts in 2011 that we underspent for a bunch of years, and we're needing to catch up. But then just what's going on in the world, just the geopolitical instability, the hot wars that are going on, what you're seeing in the Middle East, in the Red Sea, and in the Pacific, the pivot to the Pacific, you're going to probably see, all things being equal, continued increased spending.
Thank you. And just a reminder to our viewers to ask questions in the chat as well. I know we have a couple that just got sent in, so we thank you for that. And all right, another question. Talk a little bit about the aftermarket.
Yes.
Obviously, we have a lot of exposure there within GCAD. Last couple of years, and what you see going forward.
Yes. So the aftermarket, just to frame it, has done fabulously well since essentially COVID, and there were a couple of dynamics that drove that. New aircraft were delayed just because of work stoppage and loss of workers, and the supply chain, getting materials, a bunch of things essentially was prevalent amongst all industrial companies post-COVID. So what that drove was more legacy airframes and engines that were kept in service. Usually, you essentially lose 3 or 4% or so of aircraft every year in retirements, and that number really went down. They essentially held long-term aircraft, legacy aircraft, for longer periods of time. So what that means, you started seeing higher aftermarket. These older components need more servicing, overhauls, more parts that normally would have been taken off the shelves. for longer periods of time. So you had a big run up in aftermarket exposure essentially these last 3 years. Now they hit some really big numbers, so we're becoming up on a time now where you're getting anniversary of those high aftermarket growth. But with the amount of air travel, like we talked about earlier, that's projected to still grow above GDP, global GDP. Air travel is still expected to be about 5% versus global GDP in around 3 maybe. So you're going to still see aftermarket growth, maybe not at the same rates, but aftermarket is a very profitable business. And in companies like GE, for example, they make new engines, but early on, those engines are actually negative margin programs because you've got to obviously do all the R&D, you've got to procure a lot of, you got to build out the capex with the plants, a new plant, but over time those engines have parts that is really high temperature parts of the engine that wear out and they actually get ground down, just simply like debris, stuff on a runway grinds these engine blades down, so they get replaced. So you're going to see companies like GE, where maybe the aftermarket might not be as high growth. It's going to be much more profitable. So it's a mix of that, and the GE is still making a new engine. They've got this engine called the Rise engine that's going to be sort of the next generation engine. It's a much bigger engine, and you're going to see a lot of growth there as well. So the aftermarket's doing just fine.
Besides GE, what are some of the other names in that space that perhaps in GCAD or other names
Sure.
that we follow?
Yeah, so we own a company called HEICO, and HEICO makes actually parts that older aircraft could use when the initial initial warranty runs off on using the OEM's parts. So HEICO has gotten authorized and has gotten regulated and authorized by the FAA through a program called PMA, Parts Manufacturing Authority, and they can build these and manufacture these parts to spec at a discount. So you're seeing airlines that are cost conscious starting to buy parts at lower prices in the same quality. So HEICO is a great example, and there are many others. We have a company called FTI Fortress, which essentially does similar stuff where they overhaul engines that are specific to certain aircraft, and they have a skill set there. They have higher volumes, so they get some scale benefits. And so we have a bunch of companies that we like in that space.
Great, thanks, Tony. Another question from the audience: do you have an estimated potential market for precision weapons? Seems to be a very fast-growing industry.
Yeah, I mean that market is growing exponentially, and it's going to probably continue to be that. We sort of talked earlier about how technology is going to lead the way, and as much as you're going to need, howitzer rounds and tanks, probably the next generation of things are going to be precision weapons, and you're seeing it. You're seeing all of these new weapon systems come online, and the U.S. companies, all the ones we talk about, the primes from Lockheed down to L3 Harris, and then their tier one and sub suppliers. They're all going to benefit from the amount of growth when you can, essentially sit at your desk and find a target that's halfway around the world and hit it within, 1 square meter, and maybe inside of that. It's pretty powerful system.
It's incredible. Are there any niche segments or technologies such as hypersonics? I know we touched on drones or other sectors that are posed for multi-year growth going forward.
For sure. I mean, you hit on some, probably two of the larger ones. With hypersonics, it's sort of a misnomer. We almost every weapon system that goes up into the atmosphere is hypersonic, but these things have capabilities similar to what an ICBM can do, but it can stay in the atmosphere and essentially maneuver and get below long-range radars scope of surveillance. And so they're essentially very quick strike weapon systems. People call them carrier killers, and they're gonna benefit in the long term. You're gonna see a lot more hypersonic weapon systems coming online, and I think the U.S. is going to be investing heavily, which they already are in that industry. Drones, like we talked about, autonomous drones. You're going to have systems that are going to have to be able to punch through GPS denied environments and fly, essentially one-way missions and take out and be smart, be intelligent, but autonomous. So you're going to see a lot of that growth going forward.
Thank you, Tony. We've talked about some of the smaller cap companies in the space, such as Ducommun. And I guess one question we have is, are there any companies that are almost too important to fail for the, security of our, borders and our
Yeah, I
country?
mean, I'd say our primes, like it or not, our primes are L3 Harris's, Lockheed Martin, Northrop Grumman, Boeing, Raytheon. They're critical to the defense, the defense industrial base. They make the mass majority. They at least final assemble the mass majority of our weapon systems, and have the technology. You have companies like Lockheed with the Skunk Works, and they're working on all the next generation systems. You're going to see those guys, and I know we've talked about a lot of the defense techs, but you're going to see companies like Lockheed Martin, which they've already discussed on their earnings calls, partnering with all these defense techs, and and I think rightly so. Again, it's just a bigger pie. The defense budgets are growing globally, and they're probably going to continue to do so. And so you get new companies like the Andurils and the Palantirs and all these sort of Silicon Valley startups. They're going to be needed, and companies like Lockheed Martin are going to partner with them and partner for success.
Tony, it's a great time. You talked about budgets. We just got a question talking about budgets. How sustainable do you see these budgets going forward, just given some of the higher debt levels and foreign countries,
Sure.
and kind of what you expect going forward?
Yeah, so historically, so right now, let's frame everything. Right now, the U.S. Spends about 3.5% of its federal budget on defense. So historically, post World War II, when it was over 50%, around 50%, post World War II, the U.S. spent on defense on about an average of about 6 or 7%, and obviously that's including the Korean War, Vietnam War, Gulf War after it, which were big plus ups at that time. But we're still actually underspending what we historically have, and again, globally, even more so than that. There's obviously some small countries out there that spend at a much higher rate, namely Ukraine and some other countries near Russia and in the Middle East that spend at higher rates. But all things being equal, I think the U.S. has to look at defense spending as CapEx, and that's going to have to be built in the budget appropriately going forward in this, essentially this geopolitical volatile environment.
Seems like a lot of dynamics that need to be shake out. Let's look a little bit further, 5-10 years out. How do you see things kind of unfolding within the industry, whether it be M&A or just how things might look 10 years down the line?
Sure. I do think M&A is going to continue, even though the industry, it's a mature industry, of course, but it's still pretty disparate as far as segmentation. There's still quite a bit of smaller companies that are subscale, that are going to have to be acquired. These are companies that, a good example is, let's use Aerojet Rocketdyne. They were essentially a duopoly for large diameter solid rocket motors, and all motors for that matter, for rocket motors for aerospace and defense. They competed with Northrop Grumman, which was Orbital ATK, which Northrop acquired. And so here they are competing against Orbital ATK, which was under Northrop Grumman. And Northrop Grumman has a huge, investment base, capex base, R&D base, which they can support a company like Orbital ATK. And you had Aerojet Rocketdyne essentially as an independent company, and it just it just wasn't in certain conversations because of clearances. It wasn't an OEM, so it wouldn't be on what the next generation of technology is going to look like, what the Department of Defense wants. It wouldn't be read in on some of those conversations. So I think there's still a lot of companies out there like that are going to have to, I think, either partner up or eventually get acquired by the larger. And then aside from that, you're seeing a lot of private equity money going into defense, aerospace and defense. It's got all the things they want. It's got reoccurring cash flow, high barriers to entry, long-term contracts, relatively low debt, and it's just a great business that they are able to scale, build buy a bunch of smaller aerospace and defense companies, and eventually do something with that. So I think you're going to still see a lot of M&A going forward.
It's great. Let's talk a little bit about your portfolio with GCAD. Maybe kind of help the audience understand what the portfolio looks like, how many holdings within your
Yeah.
ETF, maybe some.
Yeah, so we have about 10 million under AUM, but about 35 holdings. And again, I'm really looking for uh, uh, companies that have strong barriers to entry and secular growth, have compete on contracts that are these long-term DoD contracts, and are going to continue to grow and throw off a lot of cash flow. And I like I like companies that have financial engineering involved, like we said, with companies Honeywell, and then companies that are essentially under earning, right? There's some kind of air pocket. There's a hiccup going on. There's some dynamic that is allowing me to acquire these companies at essentially at lower at run rate multiples than where they should be trading. So I like those types of companies, and we're going to continue to follow that space.
Fantastic. And Tony, maybe just kind of as an add-on to that, obviously at Gabelli, we're, a research-driven company. That's what we do. And you're constantly out visiting companies. We always like to say we don't invest in a company until we, meet face to face with the management. So, how do you look at, your research process and, visiting companies anywhere in particular, whether it be the Paris Air Show, or how does that kind of help, generate new ideas, for the portfolio and
Sure. Yeah,
value add there?
Yeah, we just got back from the Paris Air Show in June, and it was a wonderful event. You got to see thousands of companies that have trade booths. We're doing actual air shows. Their aircraft were actually flying, and it really does help you see the big picture and how big the industry is. And we got a lot of good ideas. Speaking with management, meeting with management over there, also going and visiting companies. Again, like I said, I went up to an analyst day for this company called Astronics, and they're going to be making essentially the entire electrical system for the next generation helicopter that the U.S. Army builds. And by going to that investor day and seeing the technology they have, along with other products they have that are essentially in-flight entertainment technology for commercial planes. Who sits on a plane? I have some children, and we obviously go on trips every year. And who likes to sit on a plane and with a child that can't or yourself working working on your computer and not able to connect to the internet, not have power, to charge your iPhones, your computers. And that's what companies like Astronics do. They make systems for that. And going to their investor day or going to visit management or the factories, you see what they do, and you see, hey, this is going to be a large growth sector, in the future.
It's must be pretty cool stuff to see in person.
Yeah.
Tony, obviously you have an incredible background, and maybe talk about some of the parallels between your time spent in the military making those quick decisions, and now kind of maybe how that relates to being a portfolio manager, if there's any connection.
Yeah, I definitely don't make any quick decisions. I think though that it allows me. I think my previous life of flying planes, you essentially had to do the research just like we do here. You had to know the aircraft and its limitations, and then you apply that to whatever mission you're doing. And you've got to be able to dominate the knowledge. I mean, one of our senior portfolio managers, taught me that phrase, and I think my previous life of essentially dominating, essentially knowing my aircraft, sort of translated through to this industry. And you have to be logical. You getting emotional, like if I'm in a if I were in a, like, for example, a dogfight, if I were in a dogfight and I saw maybe a situation where maybe I could do something aggressive, but I knew if I did something aggressive on the backside of that, I'd lose a lot of energy and maybe get, I'd get shot. And again, this is probably all simulation here, but it's the same concept. You need to be logical and thoughtful in your process, and just be very, very calculated.
Fantastic. Well, let's talk about something where there might not be any dog. It's our
Yeah.
31st annual Aerospace and Defense Symposium next month, September 4th. What are you looking for? What are you most excited to hear?
Yeah, so we've got a great lineup. We've got the 31st annual Gabelli Aerospace and Defense Symposium on September 4th. We've got 22 companies lined up. We've got companies, large companies, all the way from Textron, which is going to be procuring and making the next generation helicopter for the Army. It's called the MV-75. You've also probably heard it as the FLRAA. It's a tilt rotor technology. We'll be hearing from them, and that's a huge program. That's the second largest aerospace program in the defense budget after the F-35, and that's going to be around for 20, 30, you name it. These things go, in general, long-term, large-scale programs in the defense industry go for much longer than I think people mostly make expectations for. And it's going to be probably $100+ billion as when it sells internationally. So we've got companies like that. We've got drone companies. We've got smaller companies that do eVTOLs. So you're going to see a lot of technology out there. Drone defense. There's going to be a lot of interesting things to talk about coming when September 4th comes.
Fantastic. Talk about Textron a little more, and
Sure.
kind of what you think of them going forward.
Yeah, and they've got Textron's got this great aviation business, which is they do business jets. So they're essentially the leader in small to medium size business jets. And again, all the dynamics from COVID, people wanting to fly private, that has really benefited the industry. They've got a huge backlog. They make some of the best planes in the world, and that company, that business will do very well. They also have a helicopter business called Bell Helicopters, and that's the business that was awarded the Army's next generation helicopter. So you have 4,000 Blackhawks that need to be replaced over the next 20 to 30 years, and Textron is going to be likely the beneficiary of that replacement cycle. They've got a tilt rotor technology that no one else in the world can do. It does, and essentially it flies longer, it flies faster, it flies higher, it can carry more, and it's just a better technology. It flies like a plane when it's airborne. It can land like a helicopter. So they've got a bunch of great technologies. They also have a great defense business that does a lot of things for the Marine Corps, amongst other services, and they also support a lot of weapon systems. So they have this great business that we really like. We like the company.
Tony, always a pleasure to speak with you on this stuff. I know we could talk all day stocks, and that's what we do here at Gabelli with our morning meeting and open door policy. So thank you again for joining us, and obviously thanks for everybody on the webinar joining us. Just a reminder, for GCAD, we have a loyalty program going on where we're waiving the management fee for the first 25 million. So obviously we encourage everybody to visit our website, reach out to our sales and client service team to provide, our job is to provide judgment and service, as we like to say at Gabelli. So thank you again for joining us. I'm sure we'll have more of these webinars coming up, so stay tuned. And Tony, thanks again.
Great. Thanks to be here.
Tony Bancroft is the portfolio manager for the Gabelli Commercial Aerospace and Defense Fund. Miles is an assistant vice president with Gabelli Funds. The above webcast is an excerpt from Gabelli TV that appeared on August 6, 2025. This ETF is different from traditional ETFs. Unlike traditional ETFs, this ETF will not tell the public what assets they hold each day. This may create additional risks for your investment. For example, you may have to pay more money to trade the ETF shares. This ETF will provide less information to traders, who tend to charge more for trades when they have less information. The price you pay to buy ETF shares on an exchange may not match the value of the ETF's portfolio. The same is true when you sell shares. These price differences may be greater for this ETF compared to other ETFs because it provides less information to traders. These additional risks may be even greater in bad or uncertain market conditions. The differences between this ETF and other ETFs may also have advantages. By keeping certain information about the ETF secret, this ETF may face less risk that other traders can predict or copy its investment strategy. This may improve the ETF's performance. If other traders are able to copy or predict an ETF's investment strategy, however, this may hurt the ETF's performance. For additional information regarding the unique attributes and risks of this ETF, see the non-transparent exchange-traded fund (ETF) structure risk, early close/trading halt risk, and authorized participant and AP representative concentration risk in the principal risks section of the prospectus. Exchange-traded funds (ETFs) are bought and sold through exchanges trading at market price, not NAV, and are not individually redeemed from the fund. Shares may trade at a premium or a discount to their NAV in the secondary market. There is no guarantee the investment strategy will be successful. Investing involves risk, including the possible loss of principal. Premiums or discounts are the differences, expressed as a percentage, between the NAV and market price of an ETF on a given day, generally at the time the NAV is calculated. A premium is the amount an ETF is trading above the reported NAV, expressed as a percentage of the NAV. A discount is the amount an ETF is trading below the reported NAV, expressed as a percentage of the NAV. The prospectus/registration statement shows the frequency of distributions of premiums and discounts for these ETFs for the most recently completed fiscal calendar year and all completed quarters of the current fiscal year. Investors should carefully consider the investment objectives, risks, charges, and expenses of the ETF before investing. The prospectus, which contains more complete information about this and other matters, should be read carefully before investing. To obtain a prospectus, please call 800-GABELLI or visit www.gabelli.com. Risks to the ETF include a downturn in commercial air travel, production and/or supply chain disruptions, decreases in defense spending, subcontractor financial health, and competition and/or technology changes. As of March 31, 2025, GAMCO and its affiliates own 5.82% of Ducommun Incorporated, 2.27% of Astronics Class B, and less than 1% of Class A, and 1.43% of Textron Inc., and less than 1% of all other companies mentioned. Distributed by G. Distributors, LLC, a registered broker-dealer and member of FINRA.